Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Hello again, and welcome back to the Massive Passive Cash Flow podcast. This is Gary Wilson, your host. Glad to have you on board again. We've got a special guest today, okay? And I'll introduce her in just a second. But for right now, I want to remind you, if you could please, if you haven't done so, please go ahead and subscribe to the podcast. It's on Stitcher, iTunes, iHeartRadio, probably 30 different channels, okay? Now, we are being downloaded in, I think, 50 countries now, so it's getting to be quite popular. And one of the reasons is, if you're investing in the United States, it doesn't matter if you're a U.S. citizen or in another country, we have a team, a network of investor agents that are trained. We know they're trained because we trained them to work with us. Investors are certified, and you can get to them for free, and they know how to identify, analyze, and negotiate deals. They have data sources that allows them to operate outside of the traditional frameworks of MLSs and Zillows and things like that. Okay, so if you want to get to them, fastest way to do that, go to the website, realestatewithgarywilson.com, okay, and click on members area. If you're a member, you know what to do. You go to the left and log in. If you're not a member, you go to the right and go in for free for 30 days. And get the introductions, grab all the books, all the material. There's over 300 recordings of every subject you could possibly imagine related to real estate investing. And I think there's 5 free books they still let you get. So have at it, treat it like it's Christmas, and we'd love to see you on there. So for right now, though, I'll introduce you to Heather Dreves, okay? And Heather comes to us from the Great Northwest. I will let her give you the details. She's got a great subject today. It's all about funding, finding funding, particularly private funding, matching investors with the lenders, okay? So I'll let her elaborate on that. So Heather, welcome aboard. Thank you very much for taking your precious time to do this.
Yeah, absolutely. I'm honored. Thank you for having me.
You're welcome. Hey, if you wouldn't mind, I know we spoke before this, and I've read your bio and checked things out, and I was looking forward to this for a couple of weeks here. But if you wouldn't mind, before we get into the meat and potatoes of what you're doing, could you give us a background, give everybody some context of who you are and where you are and that kind of thing,
Absolutely. Like Gary said, my name's Heather Dreves. I am the Director of Funding and one of 3 fund managers here at Secured Investment Corp. Been on board with Secured Investment Corp for 10 years now, which is crazy. Time flies, right? But actually been in the private money space for over 15 years and kind of fell into it by chance, which is interesting. I've always had sales experience in my background. Didn't have a ton of real estate experience, although my parents have set such a good example for myself and my family as far as creating wealth for themselves through real estate. So I feel like I've always been somewhat exposed to it. But honestly, had a friend, a very good friend that I had known for many years that was a private money lender. And when our kids were very young, my husband and I made the decision for me to stay home with them until they were in school. So once that last one hit kindergarten, I was ready to go back into the workforce, and was blessed enough to be introduced and exposed to private money. And gosh, just quickly realized how much opportunity there was for, whether you were an active real estate investor looking for funding, or you were a investor that was looking to deploy their capital outside of more traditional methods like the stock market. There was just so many things that you could do and expose myself to. I'm thankful for it. I am now an active real estate investor, also own rentals, have fixed and flipped. I have to say, my husband and I have fixed and flipped. We don't look like Chip and Joanna when we do it. It's not quite that glamorous. So lots of lessons learned there, but found that my niche was really working with whether it was someone looking to invest their money or deploy their capital and be an active investor, helping them accomplish their goals. So just found a lot of satisfaction and fulfillment being able to help people create wealth for themselves and their families. So it was exciting, and it was a blessing to come across this industry.
Yeah, well, I agree. My background, got a degree in computer science. My first job was with Langley Air Force Base. I worked at NASA
Oh,
on the
wow.
space shuttle project. Yeah. And then I got into banking and did mergers and acquisitions and learned about money and finances and investing through traditional methods like the stock market. But my college roommate's name was Socrates, and his dad was a Greek immigrant who invested heavily in estates, and he helped us get our first house. Literally, the month graduated from college,
Oh, wow.
we were house hacking, and then I fell in love with it. I said, man, and I dreamed as a kid of being an architect and building homes and stuff like that. And I thought, this is pretty good. Well, of course, I let time slip by and finally got back to it. And what I realized, my initial thought of real estate is it's very finite, and you buy a home and you hold it for 30 years and pay it off, and then you sell it for profit and whatever. It is far more sophisticated than that. There's so many capabilities in the world of real estate investing that far outweigh traditional investing. I'm not against traditional investing. I do that too. Mm-hmm. But boy, what a great complementary kind of portfolio. So jumping forward, I want to talk about you. So jumping forward, one of the things I know in real estate investing is you don't even have to invest actively. You can invest passively. You can actually be a private lender. So can you elaborate a little bit about why investing in a real estate fund may be a great alternative to traditional methods of investing,
Yeah, I think that's a great question. And, I take calls all day and appointments, and I talk with people. And one of the common themes I hear is, hey, I'm very familiar with real estate. I like that asset class. I've owned rentals in the past. I've rehabbed houses, but I'm at a time in my life, whether it's, that they're at retirement, or we deal with a lot of people that are self-employed. They're business owners, and they have come to a point in their life where they're ready to sell their business, but they want another stream of income coming in. Mm-hmm. They're not really interested in being an active real estate investor, dealing with tenants and toilets and contractors. The funds are a nice alternative to that because our funds are backed by all residential real estate. So we're not a commercial fund. We're not, investing in self-storage units at this time. And there's lots of opportunity for that. But as a company and as a team, we know residential real estate. So we stay in our lane. We joke around here, let's practice what we preach. We educate people how to buy residential real estate, and that's the same practices that we use managing the fund. So it's a way for people to benefit from, lending money as a private lender. There's lots of nuances that go along with that, and potentially headaches. And then also being part of a fund that is active in buying real estate. And our funds actively buy real estate in specifically the Pacific Northwest, which is Coeur d'Alene, Idaho, and Spokane, Washington. I don't want to say this, but it's an amazing place. Everybody knows it. It's been all over the news. But as a fund management team, that's where we focus our real estate assets on. So it's a way to be part of that. And you don't have the headache. We do all the heavy lifting for people. And again, we deal with so many people that are, business owners. We have a huge clientele of dentists. These are people that their wealth is typically in their practice. So they get to a point where they're ready to sell. And they want to passively have income streams coming in. And so it's a great opportunity for that.
Yeah. Well, Heather, you let the big secret out.
I know.
I just tease it. It is such a beautiful place. Everybody listening and watching, I'd say I've been up there myself, and it really, it's God's country. It's just beautiful. And it's so much different in Seattle and Portland and, any of the big cities. It's amazing. The air is so clean and fresh. The sky's blue. It's just amazing. So, but that's partly why it's been so attractive, and you can see why there's so much of a migration going out there. And so that smart people see opportunity and take advantage of it when it first starts. You don't wait. The people say, "Well, I'll wait and see." Usually, you end up missing out. Yeah. So let's talk about this. This is such an interesting subject because I know from time to time we have to introduce investors or private lenders too, but it's always like on a one-on-one basis. That what you're doing really kind of sort of structures it and builds a business framework around it, so it's more systematized, and there's processes and there's access. We've just never had that or seen that before. But for somebody like a dentist or a doctor that want to invest in real estate, they just don't have the time to be actively looking at properties and
Yeah.
Picking out the countertops, all that kind of stuff. What can you tell us about? There's first liens, second liens, and my first property I bought, we had three liens on it, 3 loans.
Yeah.
But what can you tell us about like a beginner's guide to being in that first position? What does that look like, and what does the dentist need to know?
Yeah. So we have opportunities, like I mentioned, with our real estate funds for the individual that just wants to be very passive. They don't want to deal with, looking at trust deeds. But the other side of it is I have very active investors that are very specific about where they want to buy liens. And just to clarify, when you're investing in a trust deed, they can be called trust deeds, first liens, promissory notes. They're all the same thing, right? Mm-hmm. You are buying the lien against that piece of real estate, and that is your security in that loan. Because the risk in buying trust deeds is a borrower might not make their payment, right? And so as a lender and a first lien holder, you have the legal right to foreclose on them if you want, if they're defaulting on their loan. So we do sell our trustees because we have some people that are more active. They want to pick and choose which property they're buying a lien against. Some are very specific to the state, some are rate driven. Everybody has their appetite. But essentially, when you buy that trust deed, if that's the route you choose to go rather than the funds, or we have some people that do both, we assign that lien to you. So I tell people this all the time because I hear horror stories. I thought I bought a trust deed. The guy didn't record a lien against the property. Now he stopped paying me. What can I do? Well, you can't do anything. If you don't have a lien against that property, unfortunately, you have no recourse to go against them. So here at Secured Investment Corp, when people buy a trust deed, we actually provide them with what we call a loan package. They get all the documentation that we use to underwrite the file. So they get to see the borrower's credit, their bank statements, the appraisal, the title policy. And I tell people, there's lots of opportunity. And if you choose not to do it with our company and you're going to do it somewhere else, make sure you get all that. Make sure you have title insurance. Make sure that they're recording a lien against the property in your name, so you're the bank. So we provide that to our clients. Once they decide, hey, I like that deal, we prepare what we call lender documents. So we assign our interest in the promissory note, in the mortgage or deed of trust, and we record an assignment of mortgage or deed of trust in that particular county so that it shows them as the lien holder. And we even go so far as we service all the notes. And that's a big thing.
Wow.
These are trust deeds that we've actually closed through our fund. And we feel confident enough about them that if we don't sell them, we're going to keep them in our fund portfolio. So we're not, the lender that's saying, hey, I've got John Smith over here. He wants to borrow some money. Gary, are you interested in lending him some money? And we just match you and everybody's on their way. We service the notes. We do foreclosure management. We have even provided REO management if a lender takes a property back to find an agent. So we are a one-stop shop essentially. So there's lots of opportunity. I'd say rates of return on trust deeds are probably 9 to 11% annualized yields, but our funds also turn those yields too. So it really just comes down to how active do they want to be, do they want to be involved and deal with, a borrower will collect, will be the middleman, but, as a lien holder, you have to make decisions on what you want to do if they're not making their payments.
Right.
As a fund member, we just handle it all for you. You get your quarterly reports and you don't have a whole lot of headache with that. So, some people are just more active and want to be more involved. And some people want to vacation somewhere tropical and get their fund earning checks every quarter and not have the headache of it. So it really just depends on where they're at.
Yeah. And the thing is, the world is changing so fast. I mean, it was already changing fast even before the virus hit, and now it's changing even faster. Yeah. And a lot of the changes, of course, in the world of real estate. Land, for decades, people would say, hey, you really don't want to buy land. It's too speculative. And you know what, you want to buy properties that have buildings on them. But lately, more people are leaning towards land, and there's like 3D builders. There's one company in Canada that now operates in the States that are building these tiny homes, 3D printing them. It's just
oh wow,
what's happening. But it's not just that; it's also the funding. So a lot of investors, and I've been investing for 35 years. I did a lot of traditional borrowing. It started off with the big banks, I guess the obvious ones, Wells Fargo, Bank of America's.
Yep.
They're very limited in as far as how they'll work with small investors or people buying 4 units and below residential investing. They do have commercial divisions, obviously, but what happens is there's a lot of restrictions and barriers and things like that. I'm not knocking the big companies. They're big banks or any lender. Their number one criteria is risk. They look at risk. It's the number one thing they analyze. And with the bigger banks, they have such high volume, they have a lower risk tolerance, right? Mm-hmm. So with real estate investing, I really don't ever see it as being too risky as long as you do the due diligence. You properly identify the property and you properly purchase it. Let's face it, it's a physical, tangible, income-producing asset, mm-hmm. which is completely different than anything you can buy through Wall Street, other than through REITs, which is real estate investment trust. But what I'm getting at is the funding, I believe, is already started changing. And so what you're doing fits an incredible niche that I think is going to continue to grow. So if you wouldn't mind, I'd like to get your take on where you see the real estate market going, because it's baffling right now because people are outbidding each other, waiving inspection contingencies, appraisal contingencies, and it's like, and there's still a shortage of housing. So,
I know.
What do you guys feel about that? How do you think what do you see through in the future? Yeah.
Well, first of all, just to identify, we do diversify our portfolios. So we do take 75% of our portfolio balance and we originate loans with that. So that's one of the ways that our funds generate income. So there's the 75% of that balance is originations. The other 25% is real estate assets that we purchase. The origination side of it, we are nationwide. The real estate assets that we purchase are local. And the reason for that simply is because we have our own contracting crew and we're not interested in trying to manage projects 5 states over. So just to clarify that. But I will tell you, we stay in a very specific space. One is whether we're buying or lending the money, we only deal with residential, single family, 1 to 4 units. That's our lane. They're all non-owner occupied. So all your real estate investors that are looking for funding, as long as it's an investment property, we could probably provide you with funding. But I think the other really important thing to point out is we lend under the FHA cap. So as a team, we believe strongly that typically when markets shift, and we all know it's going to happen, when it's going to happen, none of us are sure, but markets are at a all-time high. It's a great time to sell. But when they shift, it's typically your high-end jumbo home loans that the values start to drop first. Mm-hmm. And we stay under the FHA cap because we believe that whether it's money we're lending or properties we're buying, if the markets shift, we can always pivot as a fund management team. We can say, okay, great, we were going to fix and flip this property, but now that the markets have shifted a little, why don't we cash flow this? We believe there's going to be huge opportunity in the rental market coming up. We just read a study that of all FHA loans, 30% of them are in default right now, which means when this moratorium lifts in September, there is going to be a lot of displaced homeowners looking for rentals. There's going to be a lot of opportunity as a fund to buy those types of real estate. And just to clarify, we're not the fund that's trying to, benefit off of other people's unfortunate events. Right. But we actually have been able to help a lot of those people and put them in other homes, maybe homes we rent. So, that's one of the things that with the market shifting and the real estate market, as crazy as it is right now, we know it's going to change. Staying under that FHA cap gives us opportunity to pivot. You can typically cash flow those properties if you're going to rent them. We actually just rolled out a 30-year rental product. So for investors out there that are deciding to hold properties, we have a very aggressive, non-traditional private lending 30-year program. And so, there's just tons of opportunity there. The other thing to mention is and you mentioned this already, that traditional banks are very restrictive, whether it's, restricting investors on how many loans they can have on investment properties. The other thing that we find is they're very restrictive on properties that are needing a lot of rehab to increase the value. We lend, that's what we do. We lend money to buy properties, and we also provide rehab funds, and we will base our loan to value off of the after repair value, which most traditional banks do not do. They want to base what they're lending off what that property is worth as it sits there. We can see future value. So that's another void I think we can fill for, the active investor that's looking for funding for their projects. Yeah.
Well, I've got to ask you this, because I know people listening are going to be asking the same thing. I don't know if you're allowed to say, or not, I'm not asking for a specific quote, but is there a range of rates? Like what's the lowest rate somebody would pay, somebody who you're making a loan to, and what's the highest, or what's the average? Because there's so many different kind of lenders out there, and most investors fall into the world of hard money lenders, and I've done it too over the years. But I've also found more mainstream traditional, like surgeons, that we're paying 6, 7, 8, 9% to, as opposed to 12 to 15. So what's if we can satisfy their appetite? I know they're going to be asking. Yes, you'll get a lot of phone calls too, by the way.
Yeah. No, that's a great question. I mean, obviously, pricing is based off of risk, right? So the more qualified the borrower is, the more qualified the deal is, the more competitive the rate is. I can tell you that our rates, if you're looking for a rehab loan, so you need money to buy the property and rehab it, they start at 8% and one origination point, and they go up from there. A couple things to point out: we do not charge a prepayment penalty. Most private lenders will charge borrowers at least 90 days to 6 months of interest, because their opinion is they don't want to hassle with moving their money around unless they get a guaranteed, payment. We don't do that. If someone pays us off in 30 days, we are happy for them, and we hope they come back to us and borrow. So it starts at 8 and 1, and it goes up from there. I'd say our average rate probably falls at about 10% and 1 point. It just depends. If they keep the loan for 6 months, it's not 10%, right? It's a lot less. Most of our savvy borrowers are in and out of these deals in 4 to 6 months. But again, no prepayment penalties. The 30-year product, they have rates down to 4% for and that's for a rental product. So that is a very competitive product, and we're super excited about that. We believe that's going to be really big.
Well, I agree. And I will tell you, Heather, I mean, let's definitely stay in touch, because I know none of us have a crystal ball, but this is my 5th market cycle. And I always tell people, turn off the television, stop watching the mainstream news, because they're only feeding you what they're being told, which may or may not be the complete, accurate, true story. The fact is, if you just think about the fundamentals of supply and demand, economics 101, the writing is on the wall. Yep. And when it turns, fewer people are going to be buying homes to live in. They're going to be turning into renters. And there's a relatively fixed supply. It's not like we can snap our fingers and create $100 million new rental units. So the good properties will be able to see rent increases. I know it sounds counterintuitive. Well, there's a recession. Well, there's supply and demand. It's like natural laws of nature. You can't violate them. They are what they are. So, for me personally, I mean, that's my position too, heading into the next year, or who knows, could be 5 years. We don't know. Last time we called for a recession, it took 5 years for it to hit, so, but there's opportunities abound, and even offshore. But what I want to do is, I know from my age, I'm 58, and a lot of my counterparts I went to school with took the traditional route and have, careers with 401ks and things like that. And I know a lot of private, dentists, a lot of my clients were dentists, by the way, have their own self-directed IRAs. What is it possible, or how can they take advantage of this through those retirement vehicles, 401ks and self-directed IRAs? Is there a way to do that?
Oh, absolutely. I would say 95% of our investors that we work with use some kind of a self-directed account. And actually, the group of dentists that we do a lot of business with, a lot of them, almost every single one of them, have a self-directed 401k set up or a self-directed IRA. So the key to all of that is having those funds with a self-directed custodian. So just for clarification, we are not a custodian. However, my team and I are very familiar. We've probably worked with every self-directed custodian out there, so I can tell you, and I'm not going to say it on air, which are the ones that we really like working with. And it's typically the ones that are easy, don't have a ton of fees. But the reality is there is opportunity to set up IRA accounts. You can even set up CISA accounts now, college savings accounts, in a self-directed status. You can roll 401k plans over to a self-directed status as long as you're not working for that employer any longer. And you can buy trust deeds. You can invest money in the fund. We even lend to self-directed IRAs. So somebody can go buy a piece of real estate, an investment property, have their IRA own it, and we will lend to their IRA, which is considered what's called a non-recourse loan.
Yeah.
There are only a handful of lenders out there that do that, and we do provide that kind of funding. So it's a great tax advantage strategy using your self-directed IRAs, 401ks, things of that nature. And we'd love to, help people, give referrals to some custodians that we're pretty close with, that we've partnered with. Just tons of opportunity in that space. And if people aren't educated about that, do yourself one favor, become educated about self-directed accounts. Lots of opportunity.
Yeah. Hey, another question just came to mind, if you don't mind. But first off, thank you for sharing that, because that's an incredibly valuable subject, particularly for a very large segment of our population. That segment of the population, at or near retirement age is, within a few years, I forget the statistic or the date, but in a few years, it will be the largest portion of the population compared to other segments younger. The millennials generating X, Y, Z, that all that combined will not be as equal to or larger than the group of the retirees of that the magical baby boomer generation that's coming to the tail end. And that whole people in their 80s all the way down into their 60s, that's a large segment, and they need housing and they have retirement needs, particularly financial retirement needs. But in any case, so what I was going to ask you is this, sorry, back to my question. We also tend to attract people, foreigners who like to invest in the United States because it's more secure than where they are, right? So is it possible, I know there are large banks like Barclays that will do international funding as long as the person who's a foreigner will put in, say, $100,000 into a deposit account in that lending institution and keep it there. Mm-hmm. But through private funding, are there private lenders who will lend to people, even just say from like Canada, for example, investing in the United States?
Yeah, we actually do on both sides of our business. So we will lend to, we have borrowers that are Canadian residents, as long as they have a entity set up in the United States, because we only lend to LLCs. People have to have an entity, then they personally guarantee it. So as long as they have set up an entity in the United States and they have an EIN number that we can report, yes. We also will accept money from an investment perspective from people outside the United States. So that is also an opportunity. So we can cater to both of those.
Cool. Okay. Well, I tell you what, we covered a lot in a short period of time.
We could probably talk forever.
I know. I think I'm going to have you back on. But for right now, I want to be respectful of everybody's time. I know people are thinking, "Gee, I got to get back to work." But this really is a true alternative. It's a way to invest passively in real estate, isn't it? I mean, is there maybe any final thoughts on that just major nugget right there? How passive?
Absolutely. Yeah. One of the things I wanted to just make sure I mentioned is, I think in the past, people historically have always thought, well, I have to have a high net worth to invest in real estate funds, and I have to have a ton of money to buy a trustee. We actually have a fund with a minimum of $1,000. So all these people with these small balance IRAs, it's a great opportunity to invest. That fund's yielding 8 to 10%. With a very small minimum, $1,000. very short tie-up period, 12 months. That's the commitment. You have to stay in for a year. So, I know that, I mainly work with people with very high net worths, but I also work with a lot of people that are just getting started or restarting. They had some life event and they're just trying to get back on track. And, I tell people, you have to start somewhere. And I know that, for some people, $1,000 doesn't sound like very much, but it's a great opportunity to get those small balance IRA accounts to work. If you're a higher net worth person, we also have a fund for that with a $50,000 minimum. So we can just about, our motto here is a circle of wealth. I don't know if you saw that, through some of your research, but we talk about this at our company. It's a circle of wealth, and everybody enters at a different place on the circle, right? We have people that are just getting started. We have people that have created wealth through real estate and owning their own businesses and are looking to passively invest. And so we really, have this urge to be able to service everybody. And we believe that we get more of what we want by helping others get more of what they want. And so, I just encourage you to visit our website, securedinvestmentcorp.com. You can schedule an appointment with me and my team. We can give you some referrals for IRA custodians, talk to you more about our funding that we offer. But we just love to share the word and, help people accomplish their financial goals. So that website again is securedinvestmentcorp.com. And you can get a lot of information on there, and also schedule an appointment. We'd love to talk more with people and help them with whatever their needs are.
Okay. So on the website, there'll be a portal like contact us or consultation.
Yep. So right on the front page.
Oh, cool. That's good. That's right. So everybody listen, I highly encourage you to do this. I know many of you I've spoken to personally over the last 2 years, and especially all the investor agents, especially investor agents on the team that we call the Global Investor Agent Team. Definitely, contact Heather, go to the website, because every week, Heather, we have conversations about this, about investors who, are seeking alternative funding sources. The investor is actually flipping and buying the rentals. At the same time, we know a lot of our listeners are business owners like me and you, and we don't have a lot of spare time. And something like this is a tremendous way to generate a really good return for something that's secured by a physical, tangible, income-producing asset. It never goes to zero. Real estate never has and never will. As long as even if you burn a house down, the land is still there. So it's not like the stock market where you're at the mercy of computer chips and fiber optic wires that are operating in microseconds. And by the time we find something out, it's already too late. In real estate, it's far more forgiving. It's a slower moving commodity, and it's easier to track and see what the trends are and participate actively in those trends. And this is one of them. And I think, well, you'd be crazy if you didn't participate, because I know I'm going to be doing it, because I'm one of those people that's in a position where I'm personally have pivoted. I'm I'm in the phase 2 or act 2 of my life, and plan on paying some defense this time around. So. So everybody, listen, I really appreciate your time participating in the podcast. Again, definitely subscribe if you haven't. Leave a review. We love reviews. And if you really want to get actively involved in investing, number one, go get yourself a real estate investor agent. Called the Global Investor Agent Team. We're in 24 states and Canada, okay? And they are trained to identify, analyze, and negotiate transactions outside the mainstream sources like Zillow and MLS and all that. And now you've got another channel of avenue for funding, either you investing yourself personally into the fund, or if you're an investor actively driving nails and replacing countertops, you can maybe get funding here too. So go to see Heather. And Heather, thank you very much for taking your precious time for doing this. I know you guys are successful, and I know this was a blessing for us to have you on,
Yeah, thank you. I really appreciate it.
Very welcome. Okay, everybody, God bless you and your families, and we will see you on the next podcast. Massive Passive Cash Flow Podcast. We'll see you next time. Bye-bye.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.